Good day, our great and good people of Vanguard Life family. Vanguard Life of the Vanguard newspaper stable. And we welcome you to today's episode on your favorite business show, Vanguard Business Life. And we've been going through some situations, a curve in Nigeria's business environment in the past 2 to 3 weeks since the resumption of our new president, President Bola Ahmed Tinubu. And then we all know the issues at play in the business world immediately after the declaration of removal of subsidies, how pressure came on all prices. And then, of course, inflation is expected to happen. We have seen inflation, but the last numbers we have was that of May. We haven't seen June, and meaning that even though we have an uptick in inflation rate to 22.4% for the month of June, it has nothing to do with the development in the past 3 weeks, meaning that we are likely to see a much more serious pressure on the inflation rate. Numbers are going to be really inflationary, almost pushing to galloping kind of inflation. When the effect of these policies begin to hit the system, hit the sectors of the economy, okay, we see some analysts looking at about 24 to 25% in the month of June, and July, August will be printing between 27 and 28%, and on and on and on and on. If we hit 30%, of course, we have a serious problem on our hands. And this is what the government is trying to avoid by trying to get the labor to back down on going on strike and pressing for 200% increase in minimum wage. Of course, at 30 naira minimum wage, the current inflation numbers has made that minimum wage grossly, in fact, useless. So we expect the rational thing to do is to increase workers' salary, the minimum wage, to meet up with the what we call a cushioning of the inflation. But then there's also the side effect of pushing the inflation to a galloping point of 30% in the months and weeks and months ahead. But then we are also seeing the uh, we are also seeing at the end of the curve the impact on the various markets. We have the issue of the foreign exchange market also liberalized. Now, the stock market operators are seeing these two developments, that is, liberalizing the petroleum industry and foreign exchange market, as positive development, especially probably in the long run. But in the interim, I talked about inflation, that's negative. But then stock market has responded positively to it. And as of last week, the gains have been massive, 1.7 trillion gains to the investors last week. And you also see the all share index moving up at about 5.5%. I think that has been the highest so far in many years. In many years. Yes. So the impact, the implication to investors, as they are smiling home, and they are still going to smile home in the days ahead, as we keep seeing the positive effects of the two major policies the new government has put in place. Our recommendations have always been in the stocks that have positive underlying values, fundamentals. The banking stocks are there, the oil and gas stocks, and coincidentally, well, not coincidentally anyway, because the foreign exchange market liberalization will positively impact on the banking sector. That's why they were leading in terms of gains in the stock market in the last 1 week, in the last 2 weeks. Followed behind the banking industry is the oil and gas stocks in the stock market. So that also tells you that we expect, or the operators expect, the investors expect a better profit or business in the oil and gas sector. Then we have in the industrial goods sectors coming third. So as you have idle cash, don't keep it in the bank savings. Look for the stocks in the banking sector, in the oil and gas sector, and the blue chips in the industrial goods sector to put in such idle funds. And I can assure you the returns is likely to be above market rate, above money market rates, which is seen at about between 13 and 15% in the past 2-3 months. So we'll come your way again. Stay with us in Vanguard Life. Have a great day.